Hello, everyone. Welcome to yet another weekly analysis. So, for this week, we'll be looking at a couple of pairs. Especially how the monthly candle ended. So, I'll tell you this, right? Every month, when there is a new monthly candle, you have to look at how the previous one ended. I'll show you why and how important that is, right? On the monthly time frame on USDCAD, you can see that we've had two consecutive bullish engulfing, right? Bullish engulfing here and bullish engulfing here. And not just anywhere, but it's coming off of a price 1.30000, right? So on the monthly time frame, I'll tell you a trick. Right? On the monthly time frame, when you see structure like this, right, it's going to be a chart pattern on the weekly time frame. It happens like that. If you see a structure like this on the weekly time frame, is most likely a chart pattern on the daily time frame. That's how it goes, right? So that's a little trick. But moving forward, you can see that it's double bottom right here, coming off of a major turning point in the market, which would also push the market to the upside. You see what I'm saying? So on the weekly time frame, we can see we've gotten a huge push last week, and then this previous week that just ended, we have some sort of a doji, right? Some sort of a doji, an indecision candle, and we'll wait to see what's happening. So moving forward, so on USD card, we have opportunities, right? We have our trading opportunities, and I'm pleased to say that every time we break into major levels, right, major zones like this, cause you will notice that I have some of them more thicker than the others. This one is a little bit lighter, and this one is a little bit thicker. Now, how this is plotted. These lines are zones, major zones that we can trade within. You see what I'm saying? So these lines are taken off of the weekly time frame or the monthly time frame chart patterns. You see what I'm saying to you? So I go on there and look for chart patterns, double tops, double bottoms, things like that. You see what I'm saying to you? So and they are called turning points in the market. I don't really name them support and resistance because they don't move. You see what I'm saying? They don't move. So I call them turning points. When we're above, I'm buying. When we're below, I'm selling. And I'll show you what I mean. You can see here on the daily time frame, right, that we're uh we're above 1 minute. Yeah, you can see on the daily time frame we were below. We came lower low. We tested it around here, and then we dropped, right. And then you can see we are above, higher high, higher low, higher high. You see what I'm saying? So they don't move. So I call them turning points in the market. Whenever price gets there, I expect it to turn. You can see when it came here, we had a turning point. You see what I'm saying? You see what I'm saying? So all of them, I do not call them support and resistance. I call them turning points in the market. So in the future, whenever I use such terms, you should understand what I'm saying. Now on the 4 hour time frame, we're looking to keep buying, right? We're looking to keep buying. Now, if you look at the past, you need to understand trading is about the history, the past. If it has happened before, it is bound to happen again. Now, if you look over here, you will notice that around this price, 1.39500, we broke, we retested it, and we had a push. Now, the same thing should happen, right? The same thing what should happen. We're expecting a break, we're expecting a retest, and we're expecting what, a break, a retest, and a push. So the same thing should happen, but it may not happen. But it is important to have a plan regardless. You see what I'm saying? It is important to have a plan regardless. So on the 4 hour time frame, we're expecting a fill in of this box. Now there's something you need to understand. When you're looking for a retest, right? It is very important for you to your retest has to be the equivalent to the same amount of consolidation in the past. What do I mean? If you look over here, we had the consolidation, right? And then I box out this consolidation and I put it in a future consolidation, right? Expecting it to be equivalent. So it is so because you don't have to, so you don't have premature entries. You see what I'm saying to you? And you need to understand trading is it's quite simple because everything that happened before is going to happen again. You see what I'm saying to you? If it happened before, it's going to happen again. Let me show you what I mean, right? You see this little impulse right here, right? It's going to be equivalent to this impulse right here, and I'll show you why. And boom, you see what I'm saying? And then boom, and you can see where the arrow ended, and you can see when it got there, that was when the push started to the downside. So you can see it's just right in front of you. You can see that was when the push started to the what, to the downside. You can see it just right to what it's just right to what in front of you. You can see when the market got here, that was when the push to the downside started. So you can see it's right in front of you, right? So moving forward, so we're expecting what, this consolidation, this box to be filled, and when it's filled, so it will be ready to execute on Monday by 3 o'clock. I'll start looking for entry signals, break of pattern trend line, and break of structure, and it's that easy. Now, in case it doesn't happen, and in case the market decide to play around and then drop to fall all the way to the downside, there is no problem. We would wait for a break and retest of this level to keep on selling to the downside because USD card is an in-between pair. I can either buy and I can either sell. That's what I'm saying to you. In the previous video, I explained what I mean by in-between pair. Now, the terms I'm saying to you lot right now, it's not textbook. These are my terms, right? It's not textbook. These are my terms for me to be able to understand and remember, the things I see in the market, right? So they're not textbook, terms like liquidity and all of that. They're not textbook pairs. They're not textbook, terms in the market. But people would use them so they can be able to remember the market in a personal way moving forward. Now on the USD card, and that'll be all for the USD card. So we're expecting by 3 o'clock on Monday morning, I'll be looking for entries. Now the thumbnail for the previous video is like so. On USD on Euro USD, it's like so, right? A retest and a drop to the downside. Now I am in this trade. Oh yes, I am in this trade. But I executed on a Friday, and I do not want to execute on a Friday anymore because when the market is trying to form a new weekly week, it has to go above and then before it starts to go in the direction. And I do not want to be involved in that, right? You call it fair, you call it whatever you want to call it, but I do not like being involved in the market on Friday, on a Sunday and on a Monday, right? Because that's when the weekly time frame has to go and form a week. I don't want to be involved in that, right? So that's just giving my own 2 cents out there. But on the weekly time frame, we can see that we are still bullish structural wise. Now the reason why we're selling is this because the weekly time frame is buried. That's why I'm selling. Now I want to show you something, right? If you look at this structure right here, let's look at the Fibonacci structure on the monthly time frame, right? You can see lower low, lower high. These are the same highs because we never created a lower low, right? So lower high, this is one high, right? Lower high, lower low. So we're looking to put in a lower high. But so how would we use our Fibonacci in this case? From swing low right here to swing high right there. And you will notice that we are currently rejecting what the 50%. This is the golden zone. We are currently rejecting the 50%, not just the 50%, we are currently rejecting price itself, which is also a turning point in the market. Like I said before, from in the beginning of the video, you have to go to the monthly time frame to see how the monthly candle ended in the previous month. And right here, if you look, you can see a pin bar. It's something to you, or a pin bar, and this indicates that sellers are no longer in the market for the monthly time frame, and that is a huge, 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 win for us, right? Because we should expect the markets to drop to the downside. Now on the weekly time frame, we are bullish, but we're expecting a reversal. So I am liable to be able to trade the anticipation, right? But that is not just all. The other reason why I'm looking to sell, I'm going to hold myself even though it's not looking good right now, is because whenever the market form a head and shoulder reversal pattern, so like so, lower high, lower low, creates a higher high above here, it comes to retest the left shoulder, and that is what we're expecting. You see what I'm saying? So I have, at least two confluences in play. I'm trading in the direction of the monthly time frame, which is the overall trend of the market, and I'm trading to, test the left shoulder on the daily time frame. So that gives me enough, incentive to want to sell. And the Fibonacci 50% is also in play. So I have at least three reasons to sell. And then that's not enough. I still need to be able to execute in the market, and I need to, make sure the break of corner trend line is perfect, the break of structure is perfect. I see reversal patterns on the 4 hour time frame, like so, everything looks good. Do you know what I mean? Everything looks good. And you may notice that we had a spike to the upside when it was, it was news, and then that spike basically came and retested this counter trend line, like so. You see what I'm saying? It came to retest this counter trend line, like so, if you notice. And then we had a huge rejection, a very much huge rejection. And I'm hoping that we could even come back into the counter trend and reject again. That these are the things that happen over the weekend. These are the things that happen when you execute on a Friday. The market will come back to that same level again on a Monday and then do whatever it has to do, either go up or go down. But in this case, we're expecting the market to what to short. You see what I'm saying? We're expecting to short the market. We're expecting the market to fall all the way to the downside. So for what other pair do we have? For USDJPY, it's clear and it's simple. USDJPY is perfect because It has retested already, or it has retested the neckline on the 4 hour time frame, like the Euro USD should have, and then give us a beautiful push. But no, it's misbehaving, right? So on your USD card or USDJPY rather, like I said, go back to the weekly time on monthly time frame and see how the monthly candle ended. It ended with a doji. So I'm saying to it ended with a doji, so we're expecting maybe a fill into a fill up of this week, and this would automatically create a morning star candlestick formation, right? A morning star candlestick pattern, right? So the weekly time frame, and yes, we are still bullish on the monthly time frame. On the weekly time frame, we are still bullish because price refused to break below the structure point, which is right here. So we are still bullish, even though we haven't technically broken the structure. But the formation is what I mean. The formation of what we are seeing is still bullish, so we look good, right? So on the daily time frame, we are still what we are bearish now. Now you need to understand something. The reason why we are bearish is because we've come into this level right here to retest the left shoulder. This is the exact same reason why we are trading the Euro USD. You see what I'm saying to you? This is the exact same reason why we are trading what the Euro USD, why we are selling it, because we are expecting the markets to come and retest the left shoulder, and it did. And now we could continue to buy because whenever this happens, whenever you see a break of structure into a price range, you need to go into the time frame lower to check for reversal patterns. And once that begins to show itself reversal pattern, you should be looking to execute in the direction of the monthly time frame. Listen, a good trade or a good trend is a trend that is in the direction of the monthly time frame. You see what I'm saying to you? So I'm willing to sell or buy it at any point in the market only if it's going in the direction of the monthly time frame. Now you can see when we had it, double bottom, we broke and we tested the neckline, which is perfect. This is what we should have, this is what we're expecting on the monthly time, we're expecting on the Euro USD, but it's spinning around, it's going down a little bit, but we're expecting fingers crossed to keep going because we're in that trade, right? So we broke above, we retested it, and we had a huge bullish engulfing candle, and this is very good. This is a great sign for us, right? A huge bullish engulfing candle. But the next trend would the next trend will leave at 1.148.000. You can see these are technical level, these are price level, these are around psychological levels, right? So you should expect a break like so and a retest, and then we can continue buying to the upside. It's that simple. There's nothing special about anything here. There is nothing different we're supposed to do. Now, the DXY is something that the DXY is a pair that I needed to be in play for me to be able to trade the Euro USD like so, right? On the DXY, something happened, right? Something definitely happened, right? We were shy off retesting the left shoulder of the daily time frame. I'll show you what I mean. We're shy of. And this is very good. Last week we had a bullish engulfing candle indicating a possible reversal. That's one. And then the other reason why we're selling or buying we should be looking to buy the USDJPY, the DXY, if you like so, right? We broke above and we've come into to retest the left shoulder. But if you look closely, if you zoom in, you will notice that we haven't really touched it. We're shy of, but I was able to wait for a bullish engulfing for me to start seeing buyers in the market, and then I expected to what I was looking to sell the Euro USD. I don't trade the DXY, but it is more of an added confluence to be able to trade the Euro USD. That is why we look at the DXY, because this is the dollar itself. And now the other confluence I had was the golden zone. So the moment I saw a bullish engulfing in the golden zone, it was a no-brainer for me, and I executed the Euro USD. And if you notice, the next level target is also in confluence with our around psychological level. So these little things they matter a lot, right? So on the DXY, we're expecting a push to the upside. On the 4 hour time frame, it looks good. It looks good. A double bottom, a retest of the neckline, couple of rejection candlesticks, just like so, and everything looks good, right? So we should expect nothing less from the Euro USD. We should expect the Euro USD to fall all the way to the downside, but it may go up a little bit to take people out because my stops are around here. I will not be lying to you. I'll say, oh, I've won the trade when I've clearly taken a loss, right? So my stop loss is around here because I executed around I set a sell limit around here, and then I said my stop loss is right here because I was expecting the markets to respect this low, so lower low, create a lower high around this area, stop loss come above, and then sell limit right here, and then my take profit is right here at the left shoulder, and it's a 4 to 1. Yes, 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 it's a 4 to 1. I'm risking 1% and I'm expected to get 4%. That's how it goes. I'm not. We're not here on here saying, "Oh, I've made $5,000 in a day." No, 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 no. We're on here telling you percentages. You see what I'm saying to you? Most people that $5,000 in a day is about 0.0, is about half a percent. You see what I'm saying to you? So they're not really transparent. They lure you in by telling you, "Oh, I made 100,000 in a day," and that could be just 1%, 1 to 1. They're not transparent with it. So trading is about percentages, not the dollar sign. Percentages, and that's how you thrive with trading. If you just look at it with the percentage, with the eyes of a percentile, right? So that's it for Euro USD. That's it for this week. And I hope and I pray that everyone follows their trading plan. Or something to hold steadfast to your trading plan and to your and let the price hit your stop loss. There is nothing like being scared, when you execute a trade and it's going against you. Something to yes, emotions will come in play, but that is why you have a stop loss, and that is why you've placed at least 1% for a risk. Example, so you can be able to sleep at night when it happens. So I hope and I pray that everyone follows the Lord. Keep on thriving, keep on back testing, keep on studying your mistakes, keep on taking lessons from your losses. And that is how we all move forward together in Jesus' name. Have a good week. Ciao, ciao.